In the meantime, today, the stock market, well, let's face it, it was a very volatile week full of sound and fury, but some actually say it might have signified nothing. And on that note, I would say I disagree with Shakespeare and also the overriding notion that there is too much excitement over the stock market because it's the only place that you can put money to work. I mean, listen, obviously stocks are more attractive than other investments, but try telling that to individual investors that have pulled billions out of the market this year. Moreover, investor sentiment has been stuck in neutral or bearish, and I'm talking for a long time. Over the last week, people shifted from neutral to bearish, both those significantly above the historic norms. There's some pockets of irrational exuberance, but none of it, in my mind, can be found on Main Street when it comes to the stock market. So with that in mind, every single S&P sector, except for technology, closed lower for the week. The XLK was helped by the 9.5% move in Apple, which happens to be 14% of that index. See, this is a market searching for leadership, but it's going to take more than just one stock, even if it's Apple. I'm not sure if it gets any better next week, although we're going to get a lot of data on the housing market, which has been mostly a bright spot. Not consistent, but it's been a bright spot for the economy. Now, unfortunately, the moral of this week is the moral victory, if you will, for this week is that the market came in very vulnerable. In fact, as vulnerable as it's been since that January meltdown, and we were able to stave off a worst-case scenario. I am personally eager to buy. We're at 20% cash, but I'm not going to force the issue.